Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well. Today's weekly expiry didn't give us a clean directional move. The market kept shifting gears and the reactions at crucial zones were inconsistent. But even on a day like this, the price action leaves behind signals that matter, and that's exactly what we are going to decode. In this video, I'll break down the moments that actually revealed intent, highlight the levels that stood firm, and show you how I am building a refined, high quality trade plan for the next session based on today's mixed structure. If you find value in this kind of deep, level by level analysis, make sure to like the video, subscribe, and share it with another trader who might benefit. Now, let's move to the charts and break it all down with precision. Overnight, there was some news of Gift Nifty going down from plus 50 to around minus 80 or something like that. I had read it early morning on the notification on the phone in one of the groups, maybe US Market Scholars. I don't give a lot of attention to the news. And based on whatever was floating around on the Telegram channels, the news-based Telegram channels, to rectify myself, uh, I was anticipating a gap down opening. Now, the opening which the market gave was extremely good, right? In terms of what where we closed yesterday, the opening that we got around eight odd points, I believe, was the gap up. Flat opening near the highs. It was a good stage being set for the move to be continued upwards, right? But then again, market has its own plan, and we simply have to follow wherever the market is planning to take us. Immediately at open, market came down into a sell-off zone. Pullback, again, we could not short the markets around these levels. Like I said, uh, we were only looking for a short entry below this. The markets came down, formed a good base around the levels that we had pre-marked on our charts, right? So this is the fib levels that we had derived from the 75 minutes chart using a clean swing. And this is exactly where I took the first trade. So just see the power of being prepared in advance for your trading, right? So how would you know, despite we are actually closing or we are trading near the breaking down below yesterday's low, right? So this was yesterday's low, and around here, why would we randomly plan a buy level, right? No, because we had our levels pre-marked. So this is the power of planning your trades. So this around this particular point, I had initially planned on entering at the break of this swing high, but then at this particular point, the option did not give me an entry yet again. And that was the reason I did not enter around here. The market again gave a small move on the downside with a positive RSI divergence, then again continued upwards. I waited for this particular swing high to be taken out. This was the candle wherein I entered into the markets, and I got around 30 odd points in this particular trade. Now, this is where I entered, this is where I exited. Now, there might be some questions in some of the regular followers who are there on my channel. Why did I not get out at this particular candle, right? This was the candle which fulfilled all the three conditions that we use for trailing, right? But then again, we did not get out in this particular candle. The reason being, uh, this was the entry level. On the spot chart, we might be above the entry level, showing small profits or maybe at cost. Whereas on the options, this particular move which came in, it went below my entry price, right? The original stop loss was around here. So because it went back below my entry price, you either trail your profits, right? It is not that you simply get scared by one red candle. You either trail your profits or you wait for the stop loss to get triggered, right? And that was the reason why around here I did not exit the trade because it was already in negative. It was below my entry. And either I would have waited for the markets to completely reverse and hit my stop loss, or I would wait for the markets to give me some move in my favor, and which is exactly what happened. And this is around where I exited the trade with 30 odd points. Now, post this particular post this particular trade, market came down a little bit again. again went up, remained sideways. At this particular point in time around here, I started looking at the open interest and observing the change in open interest. What looked like 26,000 had heavy call writing, and the kind of sideways momentum or consolidation that the market was showing around at these levels, just below 26,000, I was anticipating in case if market breaks out above 26,000 sustains, all those people would be forced to cover their shorts, and this would lead to a good one-way move or a short covering rally. That could have been a hero zero trade for us based on the expiry special setup that we use. But then again, nothing of that sort actually happened, right? This was the trend line that I had again drawn. Markets came down, broke down below this as well. On the open interest chart, there was no significant moves or change in OI that could have been seen around at these levels. And that is, take the hero zero trade based on the open interest. But then again, for entry, this breakdown came in quite late, right? And post 230, 245, I don't take any trades on the short side. But then anybody who does not keep such a filter for themselves, uh, after this brief pullback, one could have shorted the markets and again, or maybe waited for this particular uh, low to be taken out and then have a scalping trade on the short side. So this was the simple trade setup for today. One simple trade based on what we had planned, based on our setup of a double bottom. We came down a lot from the top, formed a good base around here, entered and exited perfectly. And this trade was avoided because of late breakdown post the cutoff time that I have kept for myself. So that is the reason I did not enter into this particular trade. But if anybody would have entered, it would have been a good good trade on the downside, right? Now for tomorrow, see right now for the last 2 days, market looks like again it has entered into a sideways territory, right? If we look at the markets on a 75 minutes time frame, again we are in a sideways zone. We don't need this particular fib because market has gone up, tested or retraced to the fib levels, given the reaction that it was supposed to give, but then a new high has not been formed, and we don't need this fib level anymore. On a 75 minutes time frame, it looks like a double top in the formation. So we will be marking this particular low below this. We can plan for a short trade. But then, guys, honestly, I am expecting some volatility. The biasness on all major charts is towards the long side. On a daily time frame, however, today we have got a good bearish engulfing kind of a candle. But then again, that one day was green, one day was red, entirely sideways. So I will suggest to wait for tomorrow's price action for much more clarity. So on a 4 hours, again, this is the zone which we had just deleted. So this was the 0.5 to 718. It will be the same zone that was marked on our charts, right? So below this, of course, we will be looking at short entries, but we'll take each day as it is. For any long trade, I will wait for this particular swing to be taken out, right? So on Friday, we got a good up move near the closing. Yesterday, we sustained around the highs. Today, not really. A good day for the bulls, honestly. But then it is what it is, and we need to plan accordingly. So, what I'll suggest is to wait it out for these two zones. Do not trade in between this zone or mostly in between this zone. It is going to be entirely uh, sideways momentum. And maybe. what I am anticipating is in case if we are going in for a new all-time high, maybe we consolidate here for some more time on a 75 minutes time frame as well. If we consolidate around here and then we break out of this zone, it will be much more easier to reach around the all-time high or create a new all-time high. So for tomorrow, extremely simple plan. Today was a okayish expiry. I will not say a very great expiry, but then again, our preparedness is something which got us through a good, clean trade. And for tomorrow, we'll keep it extremely, extremely simple. So that wraps up today's analysis. Even though the weekly expiry didn't give us a clean narrative, the levels we have marked out should help you approach the next session with more clarity and control. If this breakdown added value, make sure to like the video, subscribe, and share your thoughts in the comments. I read every one of them. Trade smart, stay disciplined, and remember clarity isn't given by the market, it's built by the trader who keeps showing up. See you in the next one. Cheers, and thanks for tuning in.